All right, today we are digging into a wild story. It's about Hudbay Minerals and their 2025. How does a company face what seems like a perfect storm of operational disasters and yet somehow turn around and deliver its best financial year ever? It's a fascinating look at resilience and strategy, so let's get right into it. So the whole story of Hudbay in 2025 really centers on this massive contradiction. On one side, you have the company getting absolutely hammered by a bunch of major, totally separate operational problems. But on the other side, their financial performance, it didn't just survive, it completely shattered their old record.
And this slide lays out that paradox perfectly. Look at these headwinds on the left. You've got devastating wildfires in Canada, social unrest messing with operations in Peru, a surprise power outage, and major mill maintenance. Seriously, just one of those things could totally wreck a company's year. But then you look to the right and you see record revenue, record adjusted EBITDA, and record free cash flow. So the big question is, how on earth did they manage to pull that off?
Well, the CEO, Peter Kukielski, he nailed it. He called it a transformative year. And that's exactly what it was. This wasn't just a lucky break. It was a year that fundamentally changed the company's path forward. And get this was their third straight year of record financial performance. You know, for a company in a boom and bust industry like mining, that kind of steady success is exactly what gets investors' attention.
Okay, so let's get into those record numbers. The financial scorecard for 2025, it's really something else.
First up, revenue. For the first time ever, Hudbay blew past the $2 billion mark. In the mining world, that is a huge milestone. It kind of puts them in a whole different league and just shows you the sheer scale of their operations, even when things were going wrong. Next, their adjusted EBITDA crossed $1 billion. Now, if you're not familiar, just think of EBITDA as a really good snapshot of a company's raw cash-generating power from its main business. It cuts out the noise from interest and taxes. So hitting $1 billion here, it shows just how incredibly profitable their day-to-day mining operations actually were. And this might be the most telling number of all. They generated almost $388 million in free cash flow. The best way to think about this is like your own personal bank account. It's the cash that's left over after you've paid all your bills and expenses. For a company, this is the money they can use to pay down debt, fund new projects, or give back to shareholders. It's pure financial firepower.
Now, if we zoom in on just the last 3 months of the year, the picture gets a little more complex. As you can see, they beat what everyone expected on revenue, which is great. But they missed on earnings per share, or EPS. This was mostly due to some accounting stuff that doesn't really impact their cash, plus the timing of when they sold their metals. It's just a good reminder that even in a monster year like this, things are never perfectly straightforward.
But here's the thing, these incredible results weren't just luck or because metal prices were high. Nope, they were actually the launchpad for a huge strategic shift, a financial transformation that was all about securing the company's future, and it all hinged on one massive project and a very powerful new partner.
And the absolute centerpiece of this whole plan is the Copper World project down in Arizona. This thing isn't just another mine. It's a gigantic, high-quality copper deposit that could be a low-cost operation for a very, very long time. That's basically the holy grail in the mining business, and it makes this project the clear engine for Hudbay's future growth. And to get this beast of a project built, they knew they couldn't go it alone. So they brought in a global titan to be their partner, Mitsubishi. Just as the CEO says here, this deal was precedent-setting. Why? Because it brought in a flood of cash right away, but maybe even more importantly, it hugely de-risked the whole thing by sharing the future costs and the work. A huge piece of this strategy was something called deleveraging. It sounds fancy, but it's a super simple idea. You just pay down your debt. When you do that, you make your company way more financially stable. In a volatile industry like mining, having less debt is like having a giant financial shock absorber. It gives you stability and options. And this slide, wow. This shows you just how powerful that strategy was. You can see right here they wiped out $185 million in long-term debt. Then, after that Mitsubishi deal closed, their total liquidity, basically their war chest of available cash, shot up to over $1.4 billion. And look at that last bar. Their net debt to EBITDA ratio, a key measure of financial health, dropped to pretty much zero. That is a massive, and I mean massive, financial turnaround.
So, with their finances now rock solid, Hudbay can totally change its focus. They're not playing defense anymore, trying to fix their balance sheet.
Now they get to go on offense and aggressively chase growth. They've basically built up this huge war chest to fund a whole pipeline of exciting new projects.
And this pipeline is impressively diverse, which is super smart. You've got the flagship Copper World in the US, you've got major exploration up at Snow Lake in Canada, expansion plans in British Columbia, and upgrades happening down in Peru. It's a strategy with many different angles, all designed for long-term growth, and maybe most importantly, to make sure they're not too dependent on any one mine or any single country.
So for the main event, Copper World, the road ahead is pretty clear. The final super detailed study is due out in the middle of 2026. And by the end of that year, we should get the final yes or no decision on whether to start construction. So if you're following this company, those are the dates to circle on your calendar.
Now, once Copper World is actually built and running, it's going to completely rebalance the company. You can see it on this chart. They'll have a nearly perfect 1/3 split between Canada, the US, and Peru. That kind of geographic diversification across the Americas is just critical because it protects them from political or operational risks popping up in any one place.
And the impact on their main business? Well, it's going to be huge. Copper World is expected to boost Hudbay's yearly copper production by more than 50%. 50%! That is an absolute game changer that will cement their spot as a major American copper producer for decades.
So what's the bottom line here? When you put all the pieces together, what are the most important things to remember? Let's distill this whole story down.
You can really think about this whole Hudbay saga in 3 simple steps. First, they proved they were resilient. They took a ton of punches in 2025 and came out stronger, delivering record results. Second, they secured their finances. They cleaned up their debt and brought in that amazing partner. And third, with that solid foundation, they've now pivoted hard towards growth, setting the stage for a huge next chapter.
And hey, if you want just one crystal clear sign of how confident management is about this new chapter, here it is. They announced their first ever dividend increase. Now, yeah, it's a modest amount, but that's not the point. It's a powerful signal to investors that basically says, we've done it. Our finances are secure, and we are confident that our future is bright and profitable. Which, of course, leaves us with the one big question. Hudbay has overcome all these incredible challenges. They have locked down their balance sheet, and they have laid out this ambitious, world-class plan for growth. So, now what? Now it's all about execution. Can they actually deliver on this massive pipeline and turn all that ambition into reality? That is what everyone is going to be watching next.